Now we're going to do exercise 7-3. In this exercise, we're going to calculate the employer taxes for payroll. Now remember, the employer taxes for payroll include OSTI, Medicare, FUTA, and SUTA. It also includes workers' comp, but workers' comp is not going to be involved in this problem. Now, this problem is not done very well in my accounting lab, because what's missing is they should have given us columns on how to calculate, or columns for calculating how much is subject to be taxable for each tax. So instead of doing this in my accounting lab, I've created these slides in PowerPoint, and these slides have the extra columns that will allow us to calculate, well, how much is subject to these taxes. Because remember, FUTA and SUTA and OSTI, all three of these have a wage base, okay? And just to remind you, as you can see in the red box, OSTI has a wage base of $102,000, and FUTA and SUTA, for this problem, we're going to assume that both of them have a wage base of $7,000. So now this company has 3 employees, Klein, Met, and Ring. So what we're trying to do is calculate, well, how much is the employer going to have to pay for Medicare, OSTI, FUTA, and SUTA? So our first question is we need to calculate total gross pay. And notice it says subject to Medicare. So this is just a reminder that everything in gross pay is subject to Medicare. So what is our total gross pay? So we're going to add up 900 plus 750 plus 300. So on this payroll, on this pay period, I should say, we've got $1,950 of total gross pay we're going to pay our employees. The next question is, for Klein, we had to figure out, well, how much of Klein's $900 gross pay for this paycheck is going to be subject to OSTI. Well, remember, OSTI has a $102,000 wage base. So we have to figure out what Klein got paid before this, and notice we have a cumulative earnings column. So we're going to take what he got paid before this pay period, $3,500, add that to $900, and he's still way below the $102,000 wage base. So notice this column is called earnings subject to OSTI. So how much of his $900 is taxable for OSTI? Well, all of it. So all $900 is subject to OSTI. Now let's talk about Met. Met is getting paid $750 this pay period. Met got paid $6,600 prior to this, so you add those two up, and we add these two up, and we're way below the $102,000 limit. So in other words, all of Met's, there's a question mark reminding us what cell we're working on, all of Met's $750 is subject to OSTI. And then we're going to try to calculate how much of the $300 by Ring is going to be taxable for OSTI. Well, Ring got paid $7,900 prior to this, plus $300 gives us $8,200. That's still well below the $102,000. So in other words, everything for gross pay for all these employees is taxable for OSTI because no one's anywhere near the $102,000 wage base per employee. So then we add these three up, and so the amount subject to OSTI tax is $1,950. Now it's going to get a little more complicated. So in the last column, notice it says earnings subject to FUTA and SUTA. So we're trying to figure out, well, how much of these gross pay amounts are subject to FUTA and SUTA? Now remember, the wage base for this problem is going to be $7,000 for FUTA and SUTA. That means that we can only tax the first $7,000 per employee. So let's start with Klein. Klein's gross pay this paycheck is $900. So we have to figure out how much of that, if any, is subject to FUTA and SUTA. So what we're going to find out, or what we have to do, is we have to take his cumulative earnings prior to this, $3,500, add that to $900, and he is not over the $7,000 limit. So all of Klein's gross pay of $900 is taxable for FUTA and SUTA because he's not over the $7,000 wage base. Now, we have to figure out, well, how much of the $750 gross pay for A Met is taxable for Futa Suta? So is A Met over the wage base? Well, let's look how much he got paid prior. So prior to this, he got paid $6,600. He or she, I should not assume they're male. This employee got paid $6,600 prior to this. So at that time, Met was not over the limit. But if we add 750, he or she will be over the limit. So how much of the 750 is taxable? Well, the amount that is taxable is the amount from 6,600, which is what Met got paid prior to this, up to that $7,000 wage base. So we're going to take $7,000 wage base minus his prior earnings of 6,600. That gives us $400 taxable for Futa and Suta. Okay? And the blue box at the top also shows how we calculate that. Now let's talk about Ring. Prior to this, Ring was paid $7,900. Remember, the wage base for Futa Suta, according to the red box, it's $7,000. Ring is already over the $7,000 wage base prior to this paycheck. So how much of Ring's $300 gross pay is taxable? 0. Why? Because he was already, prior to this paycheck, already over that $7,000 wage base. Now we have to calculate, well, how much for the employer, how much of the gross earnings are subject to Futa Suta. So we're going to take the 900 plus the 400 gives us $1,300. Okay? So starting from, on the total, starting from the left, we got $1,950 subject to Medicare. We've got $1,950 subject to OSTI, $1,300 subject to Futa, and $1,300 subject to Suta. So we're going to bring those totals over to the next slide. So here are our totals from the previous slide. $1,900 for Medicare, $1,900 for OSTI, $1,300 for Futa, $1,300 for Suta. So these represent the amount of gross pay that's subject to these taxes for this pay period. And the boxes in red up above have the rates. So for Medicare, we're just going to take the $1,950 times 1.45% gives us $28.28. For OSTI, we're going to take the $1,950 times 6.2% gives us $120.90. For Futa, only $1,300 is taxable. We're going to multiply that by 0.8%, and that gives us $10.40. So as you can see, the Futa tax is not a large dollar amount. And then Suta tax, this company has to pay 5.6% of the taxable amount. Remember, the Suta tax rate can vary per company depending on how often they lay people off. So the Suta tax, 5.6%, we're going to multiply by the $1,300 taxable gross wages, and that gives us $72.80. And then the last thing they want to know is how much are the total employer payroll taxes for this pay period. We're just going to add up the 28.28, 120.9, 10.4, 72.8, and that gives us $232.38. And that's it.